Thanks for listening to The Derivative. This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to The Derivative by RCM Alternatives, where we dive into what makes alternative investments go, analyze the strategies of unique hedge fund managers, and chat with interesting guests from across the investment world.
And I did 150 meetings with various fund-to-fund managers, pool operators, anybody I could, family offices. I'd go to New York and spend from Monday through Friday, one after another, and raised $0 over about a year. And that was one of the reasons why, I'd be going into these fund-to-fund guys and saying, you're all stock-oriented. If you blend in some of this fund, you actually improve your return to risk ratios. It's like a slam dunk decision.
Yeah.
Well, we've always stayed with stocks. I don't know about this futures thing. I go to a pool operator and they'd say, well, we understand the futures stuff, but you got mutual funds in there. I don't know if our, legal framework can cover securities. I don't know if our partners want to do that. There's always excuses.
Enjoy the ride. That sounds like a Harley-Davidson motto to me, the Davidson part especially, but it's a philosophy that can be applied to anything from playing golf, drinking wine, and of course, riding a nice long trend in the market. So today's guest does all three of those things, using his favorite enjoy the ride motto to guide his day to day. He's a legendary trader, quote unquote, per Michael Covel's latest book, having taught himself the ropes for launching CTA TrendStat. He's the author of Panic Proof Investing and the self-published The Frustrated Investor. And even in his retirement from the biz, continues to manage money and provide investment wisdom for every level of trader. So without further ado, we'll welcome Tom Basso to the room. Thanks for joining us.
Good to meet you, Jeff.
All right, you too. And so we were just chatting. That's your virtual background of your lovely Scottsdale view off your deck.
Yeah, if I wake up early enough in the morning, being retired and all, that's what I see. That's the morning sunrise from my back deck in Scottsdale. I've got another home up in the mountains that has an equally beautiful view out its back deck, but don't have that one handy.
My wife's uncle has a place up in Desert Mountain that I've been to a few times.
It's just 15 minutes from here.
Yeah, and you get the sunset and the infinity pool, and yeah, that's good living.
Yeah.
And those, you're a big golfer. You ever play any of those courses? Aren't there like 6 Nicklaus courses there or something?
They're up to 7 now.
7? Come on.
Yep. They added a 7th. You can play one every day of the week now.
Woo. And they're all Nicklaus?
They are.
Awesome. Where do you usually play?
I'm usually Pinnacle Peak Country Club in the valley, and then I'm up at Chaparral Pines in the mountains in Payson, Arizona at about 5,000 feet. And both are beautiful courses, and I'm pretty much in heaven year round.
And is it like target golf out there in the desert? You gotta...
No, Pinnacle Peak is one of about 3 or 4 courses in the metropolitan area that went with the old style parkland setting using eucalyptus trees like Rancho Santa Fe did out in San Diego area.
Yeah.
So you have tree-lined fairways, you have doglegs left and right where you have to work the ball. It's highly technical, a lot of fun golf for me. Desert golf, where you're hitting the target, you could bend it right to left, left to right. You're up in the airspace over top of the cactus. There's nothing in the way. But when you get a 50, 60, 70 foot eucalyptus tree that you got to go around, you got to golf your ball.
You got to pay attention.
Yep.
What's your handicap?
Right now I'm about a 10.
10. There you go.
Yep.
It's pretty good. You shot your age yet?
Oh no.
You're not old enough yet.
I'm only 68. I've got to probably make it another 15 years or so, and I might get there.
Right. You either got to be really good or really old, right?
And I'm not really good, and I'm not really old.
They'll cross. That's
exactly. It hasn't happened yet.
The golden cross of golf.
Yeah.
And then what you have those little I've been out there a few times, and there's those little pig things that run around. What are those things called? The
Javelinas.
javelinas. That's right.
Yeah, a pot of javelina can be very dangerous when a papa or mama is protecting the little ones. Papa particularly has some big husks that come out, and you do not want to mess with a papa javelina that's mad at you. So
No, I don't want to mess with a papa
I,
javelina that's not mad at me.
we just had a lady friend of ours that was out walking at night and ran into a pot of javelina, and they charged her, and she went to the hospital.
Uh-oh.
Yeah, it can get bad.
I think they should have come up with something better than a pod, right?
Well, I don't
Dolphins
know.
are
I think
pods. It
that's
should be like a habit of javelina or something.
whatever. I don't get to name these things.
Do they eat those things out there or anything?
People have tried, and
It's like a
I
wild boar,
guess,
right? It's like a little mini boar.
yeah, apparently they have a very awkward taste that is nearly impossible to get away from. And I know some people have really tried hard because they are, to some extent, a nuisance in places. And I don't know that anybody's ever figured out how to cook them no matter what. I mean, soaking them, brining them, whatever. And I'm not sure if they don't maybe have parasites too. And then you got to
Okay,
deal
I'll
with
stay
those,
away.
and you make sure. Yeah, it's probably not a good idea. I go to Safeway and pick up my pork chops or something. It's a lot easier.
And on top of all the golf and javelina stuff, you're a winemaker now, right?
Yeah, I make usually Italian reds, and I usually have the juice shipped into my Payson, Arizona house up in the mountains. And I work with about 30 bottle carboys that I can lift myself on a workbench that I built into the earthen cellar that I do it all in. So the temperature is always about 60 degrees. And I can do fermentation, and I have a second carboy that I can transfer the clear juice to and take away the dregs, and filtering and doing all the stuff that you got to do to go through the process. And then finally bottling. I have some equipment to bottle it, and I screw top everything. I think that's the most reliable way. Corks are a bad idea. I don't know why. I guess it's tradition, but
Yeah.
I far prefer screw tops from a reliability standpoint.
And they were running out of cork for a little bit there, right?
Well, it's
Like 10 years ago?
environmentally makes more sense to me environmentally. It doesn't make more sense for the economy of Portugal because
Yeah.
their workers really need the jobs to cut the cork. But yeah, corks have air pockets through them, and sometimes bacteria can get through them, and it can spoil the wine. I've had 6 or 7 bottles of wine over time, one at home and about 6 of them out at restaurants that were corked and completely bad bottles. You could tell they just smelled bad. I mean, they were terrible. I've never had a screw top ever.
And so you get the juice, as you called it, gets shipped in from Italy?
Italy or Italian grapes grown in California, either way.
Okay.
It depends which one. I've been making a lot of Amarone lately, and that's a very expensive juice to get a hold of because they have to dehydrate the grapes down to concentrate the juices. So it's quite the process. And if I can get the juice, I don't have to go through that extensive process. And then all I got to do is make the wine, and it's completely yummy and reasonably easy. I can probably do a whole batch of wine in about 6 to 8 weeks.
Oh,
and
really?
Start to finish.
And what does the juice cost? How do you buy that?
Well, if you work it out on a price per bottle basis, for 30 bottles starting point, which gets down to about 28 finished bottles because you lose a couple in the process, I'm down to about $10 a bottle for Amarone. And normally Amarone, if you go out to a liquor store, would cost you $60, $70 a bottle.
All right, nice. So you got a little trade baked in there.
It all disappears from my own cellar, either through gifts. When I'm going over to somebody's house, I'd rather bring them a nice bottle of my homemade Amarone than go out to a store and buy something that I am either okay with or not too sure of or whatever. I know the quality of my own wine. So
right, but that's like a little $40 bonus that you got yourself.
Yeah, and it's people enjoy the fact that we've got my wife's picture on it, and I call it Brenda's Amarone, and we tell a little story about Brenda, and I make it humorous, and it's kind of fun.
Did you see the who is it? The long-term capital management guys have a wine brand now, like Convexity or something it's called. Yeah.
Wow, that's
Uh,
bold.
yeah, exactly. I think I'll find it for you, but it's like a big, yeah, the label is like making fun of themselves.
Yeah, well, they have a lot to make fun of.
Yeah, they got a lot coming. You're an engineer by trade, right? Before a
Chemical.
trader?
Yep,
Was that a chemical engineer? So is this
Yeah.
winemaking back to your roots there?
You know, there's a lot of chemical engineering in my life, even in the money management, because chemical engineering to me is think of a process. You're bringing something in, like raw materials, to a chemical process. And then a chemical engineer would go through the heat exchangers and the distillation columns and the reactors and the pumps and everything to create a different product given those raw materials. Then you would ship that out to the world, to other chemical factories by pipeline, by rail car, by truck, by whatever, or use it
What's the
inside.
classic examples, like making plastics?
Yeah, you're shipping in oil, you're distilling it down to the byproducts. You're taking some of the stuff like the hexane or something, and you're moving it through pipes over into another reaction at part of the process where you're making an intermediate chemical or something, and you're shipping it out in a rail car. So it's stuff in, process it, stuff out. Well, what's money management?
Yeah.
We got
Stuff in.
downlinks coming in, satellites, we got internet, we got all this data comes in. We have computers that process it and try to decide, do we take action or do we just sit on our duff and do nothing? And then we have orders that come out of that thought process, either once a day, once throughout, or many times throughout the day if you're day trading, once a week, whatever your trading process is. The orders come out and outflow from your operation to outside in the world. So it's the same kind of thing. And with chemical engineering, you're always trying to optimize that environment and make your process more efficient. And Trendset Capital Management, which was my firm back in the day until I retired in 2003, was literally that. I mean, we had 40 computers and 10 people. 4 of us were computer jocks. We just tried to keep computerizing ourselves out of business, basically, and let the computers do all the heavy lifting because humans are basically lazy. So we work very, very hard to be lazy.
Yeah.
And, but it's just the same thing, bring in the data, process it, ship out orders. Kind of the same thing as chemical engineering.
My good grades in school stopped at the chemistry classes. I didn't like all those graphics and everything.
I got a perfect score, or nearly perfect score. I missed by 3 on my chemistry regents. I got a 97 out of 100, and I went back to the teacher and argued. New York Board of Regents is wrong, and here's why. And I said, that's how much I knew chemistry.
I had this whole debate with my daughter the other day. She's doing a project on Alaska, and in her thing it said William Seward purchased Alaska. I'm like, well, and she said, the U.S. government paid him back. I'm like, I don't think that's correct. She's like, no, that's what the teachers said. And I'm like, well, sometimes the teachers are wrong. She's like, teachers aren't wrong. I'm like, no, they are. You got to learn how to question authority. Like Seward bought it on behalf of the United States. He didn't buy it himself and then gift it to the United States. That was a lot of money back then.
Yep, that's what I remember.
So moving on, Covel says on his title of his new book, how do you feel about having a whole book written about you?
Yeah, it's different. I have, in a very perverse retirement, went from basically not even trading for about a year and a half. And my wife Brenda actually got me back into trading because I was enjoying retirement and I'm not doing anything. I was just relaxing. I traded all my life, and it's just nice to have a break. And she came to me with her portfolio and sheepishly said, I know that you know a lot about money management, and I know we're getting married, and you probably should take a look at this because I know that you're probably going to end up having to advise me on it or manage it or whatever. And so it was about 20 minutes of disclaimers before she handed it over. And I looked at it and I said, for somebody at your level in the public that has 0 time, 0 knowledge, you did a darn good job.
Yeah.
Congratulations. But then I took it over, and because I was starting to manage her portfolio, I thought, well, I might as well manage mine too at the same time. I'll just do some of the similar things. It won't take me extra time too much. And then one thing led to another. Family, somebody in Atlanta, and another guy that a stepson that was over in New Mexico at the time, now in Hawaii. It was such long distance that I felt like it's different time zones. My God, I'm 3 hours different from Atlanta, and I'm another 3 hours, I think, different from Hawaii. Um, so I said, social media, let's throw it on Facebook. So I started just saying, if I have a hedge trade or if I'm doing something particular, shifting my position, I just put it on there, figuring, I'm getting broadcasting out to all my relatives
Yeah.
what
Whoever
I'm
wants to
doing,
use
so
it,
that
use it.
I don't have to go one by one and tell them all. And then some of my old trader friends started figuring out I was doing that, and they were interested in which way I was leaning, and they remembered me from the old days. And then they start sharing things with their friends who are also traders, and pretty soon I've got thousands of people following me on Facebook. Then actually Larry Tantarelli over in Massachusetts says to me, Tom, there's a lot of stuff happening on Twitter. You should just take your posts and just copy
Yeah.
them and put them over on Twitter. Now I've got 27,000 Twitter followers. And then MeWe just came around in Parlor, and I've got like hundreds of MeWe followers now. And I've got a whole bunch of LinkedIn followers, and I hardly ever am on LinkedIn, but people keep asking to link to me. So my life has gone from being, basically retiring and being somewhat at that point obscure to being this, having books coming out on me and having a lot of interviews I do. And I enjoy them. I mean, this is my favorite topic of my life, really. I love trading, and I love helping people. And we don't always just talk about trading. We talk about wine and other things. So it's always
Exactly.
fun. I have
Those are the
fun
fun
with these
parts.
interviews, but
Having them
it,
with.
it it has been, let's see, I've been retired 2003, about 18 years now.
Woo.
And I've got videos I've done. I've done webinars. I do a lot of interviews. I write research reports if they amuse me at the time, if I have the time to do it, and I find a topic that I think is interesting and helpful to people. And I run enjoytheride.world, which is my website that I put together after having wine in Malaga, Spain with my wife one day. We were trying to take care of the problem of me getting a lot of emails and questions from people that were the same questions that people tend, new traders say, Tom, if you have the time, I have this problem. I'm trying to solve this. What do I do? And I would answer them all. And I've answered thousands of these in my
Yeah.
retirement. And we were trying to think of a way to make that more efficient. Again, process in, make it more efficient, information out, chemical engineering 101. And
Yeah.
we couldn't figure it out by way of emails, but we then started figuring, what if we did a retirement website and put a lot of my knowledge about trading in one place and make it all the way from, in some cases, free to, in some cases, like the video series, it's like $2,400 or something for
Yeah.
a 16, 17 set video series that I did my shop myself, edited myself, put it together over the course of months. And it's everything I can think of about trading all in one place. So seminar I'm going to this weekend, 2 days in Miami, teaching it with Lawrence Bensdorf, who's a master trader from Brazil. He speaks 6 languages, so he can take care of all the language issues. I can take care of the English. I do half the presentation. He does half, gives me a break. And all of these things are a way to efficiently get a lot of information out to people without me having to, be in an office 8 hours a day,
Yeah.
5 days a week, just
It seems
slogging
like,
through all that
have you
stuff.
experienced the more you put out there, the more people want to? It's kind of self-defeating as well. Like, okay, I fixed the email problem. Now I got 10,000 tweets and direct messages coming in and seminars I'm going to. So
Yeah,
yeah.
yeah, tweets have the both blessing and curse of being limited by character. So
Yeah.
I find everything there is pretty quick. Facebook gets a little bit more involved sometimes, but if somebody asks me a question that gets beyond Messenger, and it's just awkward to do it, I give them my email and say, could you ask me the same question over an email, and I can answer it a lot easier over there.
Yeah. I'm not
So
doing
I kind of
30
do it to
tweets.
suit me. And a lot of times if somebody asks me a question that I know is answered on the website, I just have my website up all the time. I just go to that page, copy the link,
Here you go.
say your answer is here. If you need
Have a
more,
nice
let
day.
me know, Tom.
So take me way back, even before Trendstat,
Okay.
of how you got started, how you became known as this legendary trader, kind of before um, all that other stuff. So take us back. How
Well,
did it all get started?
it all got started, I guess, initially. The first investment was a mutual fund with Fidelity that was front end loaded while I was a paper boy at 12 years old. I had
All
about
right.
$10 a week. And I decided if I could put $10 a week away, I might be able to pay for some of my own college education because my father was a postman and my mom cleaned dishes at the high school. And my father worked extra handyman jobs just to try to keep us in clothes and us three kids in clothes and food. And my brother's 6'5" and 260, and I'm 6'3" and 207 this morning. So we ate a lot, and so my poor dad and mom had to try to keep up with it all. And so by the time I got around to college, between scholarships and savings and my mutual fund that I had saved and all that, I was in good shape to take. I think it cost me about 18,000 to go to Clarkson University and get a chemical engineering degree. Back in the day, it's now more like 160,000 in today's terms. But 18,000, and I think I ended up with about 4,000 of student loans. So I through summer jobs, working as reffing basketball games and doing whatever, I was able to get through. Now, when I'm coming out of college, that was another critical juncture because now I'm sitting there thinking, wow, I got 26 job offers at chemical companies and oil companies as a chemical engineer. I wonder which one I should take. So part of your decision is what city are they in? What's the climate like there? What's the job entail? How much are they going to pay me, et cetera? And then another one, I thought, maybe I should check out their stock price and just see what their stock programs and what their stock is doing. Maybe that'll give me some insight as to companies that are sort of failing or other ones that seem to be going crazy. So I started plotting like 26 different companies' stock price, and I didn't know how to do that. So I got a book on point and figure charting, read it, started the point and figure chart back in those days. This is pre-computers now.
Right, you're
I
doing this
paid
on graph paper or something?
graph paper. Yep, little tiny square boxes, X's, O's, point and
Yeah.
figure, all by hand, and did that for about a year or so,
And
and
tell people what a
decided.
point and figure chart is. I don't know if our listeners know exactly what that is.
Uh, yeah, if you go on some of the broker platforms, they might have that as one of the indicators, but it goes back to old school floor charting where there's zero computers, not even calculators. And if you're on the floor of the New York Stock Exchange, you had to have a little piece of postcard that you can put in your pocket, and you had to have a pencil or a pen, and you had to be able to track how prices went up, which are X's, and prices went down are O's, and they go up again and it's X's and O's, and you get to see where the chart patterns are, and are the prices every time you have an X, does the X make it higher than the previous row of X's, and
Yeah.
therefore you're sort of in an uptrend, or does the O's exceed to the downside the previous row of or column of O's, and therefore you're on the downside and you're in a bear market or a bear move. And that's the way these guys could easily keep track of which way was the market drifting at any point in time, and they could do it with zero computers and very quickly. So there's no time axis on a point and figure chart. It's just X is up, and then when it decides to turn around, go the other way, you start doing zeros or O's.
Yeah, but at
And
each price level, right?
yeah, at the different price levels.
Yeah.
So as the price hits that level, you just put another row, or if going down some farther, you put another row, and you just keep doing it. And that's how I started out. And then I graduated into bar charting, and in 1980 was thrilled to buy my first IBM PC with all of something like was it 4K bytes of RAM
Yeah.
or something ridiculous. My phone has like hundreds or thousands of times the capacity of my first
Yep.
computer. And a couple of years later, I bought an IBM AT. The rest is history. I just kept programming things, growing. I hired computer programmers. I started out with just basically a secretary and myself and some computers. And then, by the time we hit the peak, we were 600 million and trading. We had clients all over the world. I traded money for Merrill Lynch and Chase and Bank of Montreal and Royal Bank of Canada and all
But
sorts of.
so did you ever take one of those chemical engineering jobs, or no? You went straight
Oh
to
yeah, no, I did take a chemical engineering job for about stayed there for about 5 years.
at Monsanto, right?
Yeah, exactly.
Yeah.
And then I moved over into marketing research for about 2.5 years, and then I became a strategic planning analyst in the chemical industry, which is basically picking apart your competitors and trying to figure out, based on aerial photographs or effluent streams that are filed with the EPA, back calculating using my chemical engineering experience, roughly what their capacity might be. In other words, if you know they're emitting this amount of effluent, then you can back calculate by the process they're using in the typical impurity streams. You can take a guess at how much is their capacity, because they're your competitor and you're trying to figure out what percent market share do you have, what percent do they have. You're doing a lot of chemical engineering on your competitors and on the marketplace, on your customers, try to figure out the best way to get your product out there at the maximum possible price and use up your capacity, or decide whether you need more capacity and make a recommendation that we increase the capacity of the plant or something. So that was kind of fun for a while. And
And
I
then you
became,
said, screw all this, I'm going to go manage money. So
I was making so much money on money management on the side, just going home at night and doing all the updates and
but in
computerizing it.
in
In
stocks or
stocks, in
yeah.
stocks. That was that day in stocks. And I was making enough money from that it paid me exactly the same money I was making from my chemical engineering job. So I didn't even have to take a cut in pay. Benefits and everything were all covered. I went and started the business up, hired the secretary, leased the office, got the computers going, went out and kept raising the money. Eventually, I had a couple partners join me. Eventually, I left that firm to them and formed Trendstat and never looked back and grew it to a huge operation covering futures, currencies. We traded 30 currency pairs at the peak, about 80 futures markets, 25 mutual funds, individual stocks, T-bills for collateral control.
Yeah.
A lot of stuff going on.
And what was the base model? Was trend following? Is that fair
Yeah.
to say?
Yeah,
Trend
fair to
stat
say.
and
Mm-hmm.
very what would be considered today basic trend following, or a lot of bells and whistles?
Well, we had our own little wrinkles that I figured out. I had great position sizing, which I wrote a book on now called Successful Traders Size Their Positions, Why and How. And it's only 65, 70 pages, maybe 80. Simple math that you learned in about 7th grade at the latest. And it's a simple way that Trendstat used to keep all their positions sized appropriately for the different market conditions that existed, and in every trade that comes along and across the portfolio. So I actually spelled it out in detail, the precise same models that we used at Trendstat. And it's $10. I kept it so inexpensive so that you can download it electronically. It doesn't cost me much for you to download it electronically. It doesn't cost you much to buy it. It's sold thousands and thousands of copies now, and people love it. So stuff like that we had figured out with the help of a lot of research. I did a lot of simplistic research for MAR reports back in the day that no longer exists, I understand. And a lot of these were just kind of my observation of some of the stupid things that go on in the money management industry, even by the professionals in the money management industry. They don't make sense to me and don't hold water mathematically, but they happen anyway.
Such as?
Well, like, okay, so I'm a money manager. I'm going to a fund manager, and I've just ripped off 6 of the best months of track record that I've had in my entire lifetime. And the money is coming out of the woodworks. It's being thrown at me as fast as people can sign up Trendstat to manage 10 million here and 5 million there. And we want you to come into New York and meet our board, and we're going to give you 100 million. And could you come over to Abu Dhabi and meet with us and all these different places. And everything goes nuts. And that's about the time you're about ready to go into your next drawdown.
Drawdown.
At the
Yeah.
bottom of the drawdown, people are calling up, complaining, pulling money out, and you're saying, the risk levels are way down. This has kind of been overdone. We're could be ready to turn the other way. Nah, they won't listen. Pull the money. So now your assets under management go down. You got to figure out how to deal with that from a business standpoint. And then the process starts all over again through the
Yeah.
next lunatic cycle.
I've
And
always
I,
thought it'd be someone should come out with a like reverse fee structure or something like to incent people to invest at those drawdowns, right? It'd be better for them. It'd
yeah,
be better for the manager. Like, hey, I'm going to give you fees are on sale when the equity curve's on sale,
yeah,
and
people would always want,
disincentivize them to get in at the highs.
I would just rip off a 15% return or 20% return in a few months or whatever, 6 months. And they'd want to give me $40 million, but 0% management fee and 20% incentive fee. And I'm sitting there thinking, okay, so I take on this account and it goes into the next drawdown and the next cycle happens. And you pull it out at the bottom and I make no incentive fees. I get no management fees, but I'm gobbling up 40%, 40 million of my capacity,
Capacity. Yeah.
which is limited with your money. It just doesn't make any business sense. So I turned down tons of business over the years. I could have been a lot larger, but I just wanted quality business. I wanted good clients. I tried as much as possible to keep the clients that were sensible and knew what they were doing. And to some extent, because I was, I would say, a little more on the boring side, being an engineer and keeping everything sort of plodding along a little bit more than some of these guys that I was competing against that would be up 60 and down 20, all over the place to
Yeah.
drive people crazy. I was a little
Like
bit more
John Henry
boring.
were
Yeah,
alluding to.
like John Henry. He was one of my major competitors. And you had Campbell and Company, and you had Dunn.
Yeah.
Some of the Turtles were out there during my years because they were my compatriots. They were all my age group, sort of. So we all came up together. Jerry Parker, a friend
Yeah.
from the old days. Those kind of guys.
So
Some of them are
Campbell and
still
Dunn
around.
and Chesapeake are still at it.
Yeah, some of them are
Yeah.
still out there. Yeah, Chesapeake was another one. Yeah, they
And so
were all.
you mentioned the mutual funds. What were you doing in the mutual funds? That you were trend following
I
mutual
was
funds?
timing. Yeah, I was timing mutual funds back when mutual fund timing was starting to get a bad name, and mutual funds were complaining about us timers, moving money too quickly in and out, and it was upping their costs, and they had to adjust their position sizes, and they didn't like that. And
But they're only pricing at end of day. So this was purely end of day strategy,
end of
or
day,
what did you have some component where you were trying to get in at a better NAV or something?
no, and end of day only. Nowadays, of course, you do that mutual fund timing in ETFs,
Yeah, yeah, yeah.
and that's what I do. I actually trade I think a 23 ETF portfolio of all sorts of different sectors, and I use trend following to do it and position size it, and
Is
yeah,
it
it's easy.
and were you always on in the Trendstat portfolio, or would you get stopped out, or would it reverse long short?
No, I didn't go short, and I don't now either. I tend to
Trendstat
just go.
never went short.
Oh, I went short in the futures area, but
Got
on
it.
the mutual funds,
Yeah, yeah, yeah. No.
you couldn't go short, and even ETFs you could go short, but I choose not to.
Yeah, I'm talking. So back to Trendstat and the overall portfolio. So you had all these currency pairs. You eventually moved into futures. So we're talking
No,
like
I started with futures, moved into currencies.
okay, into spot currencies.
Yeah, yeah,
And you're
that was
trend
fun.
following those.
That
But
took a year to make that transition, by the way. I mean, I was well known as a future trader. We were already up in like the 100 million range and a very viable CTA making tons of money. And I decided to go into currencies, and FX is so different on the programming. It took us a good year to work out all the bugs. It was quite the learning curve.
yeah. And so give me a little more on the portfolio. So it's a classic trend following global portfolio, 80 plus markets or so. So
Yeah, I mean, we were trading for a while, like things like red beans.
yeah, Azuki red
Uh,
beans, is that what they were called?
yeah, and rubber. And gosh, we were into the weeds on some of the stuff. I had to convince some of the people that had put those in there when I looked at the transaction costs and the slippage. I said, the slippage is eating up all the profits you'd ever make from this thing. It doesn't make any sense. Let's just get rid of it. It's not worth trading.
Yeah.
And so we pared that down a bit. And I think at the end, we were probably down to about 40 markets or so. 40 to 60 worldwide in today's world would be probably what you'd be limited to. And a lot of it would be debt instruments worldwide, sovereign debt around the world. Currencies certainly have depth to them. A few of the agricultural commodities have depth. Energy certainly has some depth. You start getting into lumber. I mean, I can do that for my own portfolio in retirement, but
Yeah.
back in Trenstad days, I mean, I looked the other day, the whole volume for the day was like 147 contracts or something.
Yeah. No thanks.
It's
With
kind of
$600 million, you're the bull. You're not the ant on the bulls.
no,
Behind, right?
you're going to find yourself in a lot of limit moves where you can't get out of the market.
So somewhere along the way there, you got approached by Jack Schwager, and you went into the New
Yeah,
Market Wizards book.
the Jack Schwager story was interesting because he really didn't want to interview me initially, but Tharp and some other people kept saying, Basso's got some interesting stuff. He he's kind of this guy that approaches things analytically, and he keeps everything smooth, and he's a little boring, but he's very interesting on the mental side of trading, and he's figured out a lot of things. You ought to interview him. It'd be interesting. So Tharp puts together a seminar up in New Jersey, and I get invited as a guest speaker, and Jack happens to be offered a free deal to come and just sit there and listen. And by lunch the last day, he comes rushing over to me at break and says, "Tom, what are you doing for lunch? I'd like to interview you. I got a next book coming out." And so we decided to go to lunch, and we do the lunch. We're running out of time. And I said, "Jack, I got to get back. I'm the guest speaker this afternoon. I got to be there." And we're kind of pushing it. But I'm having a good time. Why don't you just call me up when I'm back in Scottsdale and you're up in New York, and we'll chat on the phone and finish our talk. No big deal. He says, "Great." So he does it, writes it up. He FedExes me the whole chapter. And of course, he names me Mr. Serenity. And I'm reading through the whole thing. And I read through it. I was like at lunch. I'm having lunch and reading this thing. And I get all done. I call him up. I said, "Hey, FedEx delivered it this morning. I've already got the entire chapter read. I do have one comment." And he said, "Okay, let me get a copy." Papers. I said, "Turn to page 8. Turns to page 8. I said, "This word is misspelled." He said, "Okay, what else?" I said, "That's it."
That's it.
He said,
Mr. Serenity.
"That's it. You don't have any other changes?" I said, "No, I thought you pretty much captured the interview pretty well. Some cases you kind of modified what I said to make it more sensible. It sounds better than the way I would say it." "No, I think it's very understandable. It's exactly what I was trying to get across. No problem." He said, "Are you okay with my naming you Mr. Serenity?" I said, "Jack, it's your book. You can name me anything you want. I don't have a problem with it." He said, big pause. He said, "Tom, this was the easiest chapter I have ever written in all of the Wizards books. It's like I turned it on, it flowed out of me. I was done. And it was just the way I wanted it. And now you have a spelling mistake, and you haven't changed the thing either." And I don't know if it'll be in the book. It's up to the publisher and the editors to decide. But I really enjoyed doing this interview. It ended up in the book. I became Mr. Serenity, became a well-known entity in the industry at that point, and kind of my life went crazy.
Yeah. So do you think, were you as famous before then, or no? So that put you on the map in terms of being a legendary trader.
Yeah, that probably made me legendary. Before, I was getting well known, and I was making a lot of inroads, and I was getting a lot of business, and we were growing rapidly. But after Market Wizards, that's when I became legendary.
Right. But it was I was always under the impression in the past that you were like doing your own personal trading. Then there was the Market Wizards. Then there was Trendstat, but that's not true.
No.
Yeah,
Oh no, so Trendstat.
Trendstat predated all this infamy. Right?
Trendstat was the proverbial 20-year overnight success.
Yeah.
When Market Wizards came out, new Market Wizards came out, I was well known everywhere all of a sudden. But no, I had already been slogging away for 20 years in the trenches to get to that point.
And then I read, I can't remember where that was, maybe in one of Covel's books, that you did, I can't remember exactly, but 115 meetings or something one year.
150.
Zero assets raised. So
Yep.
I think we got a lot of managers who listen to this. So tell us about that. I
Well,
found
I
it
did.
interesting of all the excuses and the backs and the forths.
Yeah, I had a product that I called a multi-strategy single manager multi-strategy fund, and it covered securities with mutual fund timing. It covered currencies with FX. It covered futures markets by multiple strategies. There was like 6 or 7 strategies embedded in one fund with a very attractive management fee and incentive fee, both on the low side of the industry in a partnership format. And I did 150 meetings with various fund-to-fund managers, pool operators, anybody I could, family offices. I'd go to New York and spend from Monday through Friday,
Yeah.
one after another, and raised $0 over about a year. And that was one of the reasons why, I'd be going into these fund-to-fund guys and saying, you're all stock oriented. If you blend in some of this fund, you actually improve your return to risk ratios. It's like a slam dunk decision.
Yeah.
Well, we've always stayed with stocks. I don't know about those futures things. I go to a pool operator and they'd say, well, we understand the future stuff, but you got mutual funds in there. I don't know if our, legal framework can cover securities. I don't know if our partners want to do that. There's always excuses. Everybody was looking for what they didn't like about it rather than realizing the benefits of it. So
What year
myself,
is this?
this is now getting back into 2001 area,
So
2002.
the bubble hadn't totally burst yet, or it was just
Oh
starting to
no,
burst.
it was bursting. The tech bubble. Oh yeah, it was already getting beat
Okay.
up, and
So
I
you
was
think those
waltzing
stock
through it.
guys wouldn't have been as excited to be saying, "Oh no, we only do stocks."
No, I mean these guys had just gotten beat up, and I showed them where they wouldn't have gotten beat up if they had done something more sensible. Tried to talk in their language. I'd been in the business for 28 years or whatever it was. I knew how to speak the language, and they many cases they appreciated what I was saying, but you could just say they didn't have the courage. They didn't. It was something new, and there was only myself and I forget who else at the time. I want to say I don't think it was Campbell. I'm trying to think of who was my competitor. There was 2 people out there that were starting to get into what I call a single manager multi-strategy. And so you're putting multiple strategies under one umbrella and charging one fee schedule. And the
Yeah.
advantage, of course, is that when you have a pool and you're hiring 10 different managers, like I was frequently hired, if I'm making money and getting an incentive fee, but the next guy's losing what I'm making, then the fund itself is not benefiting at all by the
Yeah, they
2 of
still
us
pay the
being in
fee.
there, but you're paying me an incentive fee and not an incentive fee to the next guy. So it doesn't make sense
Yeah.
from the clients. But if
Netting
you do a
risk.
single manager multi-strategy, now you offset all of those strategies and you pay one incentive fee on the total fund. It makes a lot more sense for the clients. Well,
But you have the idiosyncratic risk of that single manager would be the other flip side of that. But yeah.
I guess. Okay, but if you
But
trusted
these,
me to, if you wanted to hire me to do one single strategy, why wouldn't you hire me to do multiple strategies? You trust me that much. Why not trust me a little bit more?
yeah.
But 150 appointments and nothing. So I started looking at my life and saying, I'd rather be dancing or singing or cooking or making wine or playing golf or whatever. This
Yeah.
running around the world, beating my head against the wall, and people just don't seem to get it. And this was back in like 2002, remember? Okay. So now there's 2 of us kind of competing, and neither one of us is, doing very much trying to pull anything together. And so I go away from the industry and retire and have a smile on my face most days. And lo and behold, Eric Crittenton,
Yeah.
about 3 years ago, calls me out of the blue, and he and I have known each other for a couple of decades. He's here in Scottsdale, so am I. He says, Tom, I don't know if you know this, but I'm out of my old firm and I would love to have lunch with you. I've been kicking around a few things. So he sits there and lays out this whole thing about how he's thinking of doing an alternative management fund that can do securities and futures and blend them together. Single manager, multi-strategy,
Yeah.
same thing as Trendstat. And he wants to put it inside of a mutual fund, which is so much more sellable than a partnership is. Investment Company Act of 40. Oh my God. I said, Eric, do you know how much that's going to cost? He says, yeah, I do. It's
Yeah.
going to be $400,000 to $500,000 probably in legal expenses. And I said, then you realize you're going to have a team of people. He says, yeah, I think I have an idea who I could get. And then he starts laying out the strategy to me. And I'm blown away. It is brilliant. It is simple. I love it. It has aspects of trend following. It deals very well with large capacity. He can easily manage several billion without
Yeah.
any issues at all. He lays that all out at lunch. The lunch was like 4 hours long. Blown
Hopefully it's a good
away.
spot.
My adrenaline was flowing. I was so sky high.
You were
Said, we
back
got
in
to
the
get
game.
together.
Yeah.
Well, we got to get, no, not at that point. I wasn't. I was still retired. So he starts saying, well, let's get together again. I'm going to think about it some more, and you think about it too. Let's get together in a couple of months. So another 3 months goes by. We get another 3-hour lunch, and we talk about it. And now he's got people identified. He's got a little bit more structure to what he thinks he's going to need to pull it off. And I tweaked it a little bit, and I said, Eric, from my standpoint, I think you're being too conservative. I think you this and that, and we hem and haw. And I gave him my grandfatherly advice at that point because I'm getting into my late 60s and he's still a little younger than I am. And he writes that all up and he comes back to me and says, Tom, I'm ready to go. I think I've got all the pieces of the puzzle together. I've got my software under development. I've got the people doing the software. I've taken programming myself. I know what markets I'm going to trade. I've done a lot of simulations. I think I'm ready to go. And I said, so how much you got to raise? And he told me the number. I made a few phone calls, and inside of, I think it was 5 days, had all of the capital raised for the management company.
There you
Within
go.
about 6-7 months, they put together the legal on it, which was extensive. It was very expensive. These are lawyers that are going to charge you $300-400 an hour. I mean, it is insanely expensive
At
because
least.
not very many people really understand this stuff. And you got to do offshore corporation to take care of the future side and get it to fit inside the. You got to inside the mutual fund. You got to get.
Yep.
You got to get your fund managers, your custodians, all that garbage. Oh my gosh, so much legal work. Finally get it together. Finally pull the people together. I've raised the capital. They eat into the capital by $500,000 or so to get the thing off the ground. They've got a budget for the rest of it. Comes time to form the board. Well, I'm on the board. A guy named TK Kellenbeck's on the board, and Eric's on the board. There's 3 people. Eric and I are pretty darn knowledgeable of investments, you could say.
Yeah.
And TK is run the highest level. He's on the board of Cathay Pacific. I mean, he's at the highest level of boards out there in the world in the airline industry, but
That's
very
got to
good
be a
with
tough
corporate
board
structure.
to have been on the past year.
No, not really.
A lot of red numbers.
No, it turns out
No,
that
of Cathay Pacific. I'm
Oh,
talking.
yeah. Oh, yeah.
Yeah,
Oh,
with
yeah,
the
absolutely.
pandemic and airlines going
Well,
down.
and Hong Kong is their headquarters.
Yeah, so there's a lot of
Even more
issues there.
interesting. So we have a blast at our board meetings. We're work so well together, and management team is so talented, and they're above 50 million now, and we're trying to get together a happy hour to celebrate going over 50 million. But they're beating their expectations on both performance of the fund, the risk versus their sector. We're beating our marketing goals in terms of assets under management.
And
So everything's cruising along.
We've done a pod with Eric. We'll put it in the show notes. But
Yeah.
do you think, so when you were doing your multi-strat and timing the mutual funds, you didn't have kind of an always long equities component though, right? So
No, I would, and Eric does.
Right. So do you think the industry had to you were ahead of your time even a little bit? The industry had to come along in order for this product to even exist, right? I feel back in the day, everyone wanted to do it them. Oh no, I've got the equity piece. I'll find the alternatives piece. I'll put them together.
Yeah, Standpoint is,
And
to
maybe
me,
now, because we've gotten Twitterized and we want everything done for us, millennials, like, no, they do it for you. They put it together for you. Just send your money over there. And it'll
exactly right.
automatically rebalance, right? There's a lot of good that comes out of that.
Ton of good. And so Standpoint to me, in my life, is Trendset 2.0. I feel like being the chair, I guess I got because I raised all the capital that got the thing off the ground. They
When
thought
you're
it was
showing your
logical.
age, though, they call it 2.0, not 2.0. 2.0.
2.0. Okay, whatever. But it's basically a single manager, multi-strategy fund, which in this case, you don't have to beat your head against the wall for 150 appointments and get zero capital. People are basically signing up for the fund as fast as we can process it. It's kind of nice, a real different environment for me, and I'm having a blast kicking ideas around for Eric and how to position himself, how to help him with things like public relations. Because Eric is, started out like I did as an engineer, sort of nerd. He wasn't an engineer, but he definitely admits to being a nerd back in the day, and I would admit to being one too. And you kind of have to figure out how to do a logical podcast with someone, and how to smile every now and again, how to tell a joke here and there, how to tell a story. And I'm giving him a little bit of my fatherly advice about those types of things. I'm also talking a lot with him about strategic direction and how to deal with future capacity issues and how to get ahead of problems rather than have them surprise you.
And
so we have
that blend solves the issue you were talking about of like, oh, we're in this drawdown, I'm going to pull my money right when I should be putting it back to work, right? The blend concept kind of solves that issue by removing the line item. And you can just...
Well, look at it this way. Let's say you have 50-50, like we do at Standpoint, and 50 of it is something like 60 different futures markets, and the other 50 is a bunch of worldwide stock exposure, long.
Yep.
Okay, so let's say you go through a beat yourself up bear market, and the 50% that was stocks is now only 40%, making, of course, the futures part of it now 60%. Well, then what you're going to do is take 10% out of the futures, and you're going to move it over to the 40% of stocks. And in the middle, at the end of this drawdown that you're going through in stocks, you're going to be putting money into the stock portfolio to catch the next upswing.
Yeah, there's been, I don't know
the
if you ever
exact
seen the
opposite of what clients typically do. So you're fighting the client psychology and the types of things that is bad investing that I did all my research papers on. Standpoint internally is actually taking care of the problem for you.
Right, it's
beautiful.
Like solving a market problem and a behavioral problem, and the behavioral problems have become much more top of mind, right, recently. And
I've done
PhDs
a lot of
and research being written on that.
A lot of the questions that I get from Michael Covel and even you and others out there get into the psychological side of investing. And I'm fond of remembering one thing that Van Tharp, who's a famous psychologist in the industry, talked about. He said, what's more important, your buy-sell decision or your position sizing or your mental side of your trading? And, you get a lot of different comments, and some people say, well, position sizing, I heard, is pretty important, but you got to know where you're going to buy or sell, or
and a pure quant would answer that, the buy and sell signals every time.
Exactly right. And not surprisingly, I did 3 webinars, just decided for the hell of it. Saturday morning, each one. My wife ran the show, and I was obviously the speaker. Did one on trend following, buy sell signals. I did one on position sizing, and I did one on the mental side of trading. The buy sell decision one, we had over 100 people signed up for it, and I had to expand my Zoom capacity to handle it. The position sizing, I was down to about 45. And when I did the mental side, we were down to 20. Now, I put them together into a library on enjoytheride.world website, and people can buy the recorded version of it and whatever. There's still the largest sales are the buy-sell engine, and that's the least important. If you, as Tharp would say, if you as a trader in your own mind, don't believe in what you're doing, or you get scared, or you get euphoric, or whatever, you are going to jump in and screw up those other two things because you have the ultimate power as the trader. The other two things are just, they flow out of you, or they're just details. But the mental side's the most important. And of course, he's a mental side psychologist, so he would say
Yeah.
that. But I truly believe it. I
Advised.
mean, I've seen so many guys just
But as a
override.
yeah, but as a systematic, right? You'd be like, well, it doesn't matter my mental state because it's all systematic, it's all computerized, right? So why
No,
do I need to
wait.
have a good mental state?
Oh, say I come down to, we opened up down, was it 500 on the Dow, or yesterday it was down 500 Dow, I forget. You get scared, you got everything systematic, and then your strategy goes in and says you got to be buying, and you look at what happened and you go, oh, I don't know if I can buy. We were down 500 today. So you, as the systematic trader, have the ultimate ability to turn the computer off, or
Yeah.
not do the trade, or I'll take this trade that looks more sensible, but this one I'm a little scared. I'm not going to do that. All mental. If you aren't head screwed on straight, balanced, disciplined, taking self responsibility, all those good things mental in the trading game, you will find a way to screw it up.
The reminds me of a story. A programmer we worked with out of Spain actually had a trader said, "Can you make it so my trading platform won't open after I've had 3 losses in a row?" So he put a custom software on there where he wouldn't, because he analyzed his trades, and after 3 losses in a row, he'd start chasing, and he'd turn a bad day into a really bad day.
Or a bad
So,
month, or a bad year. How
yeah,
many people out there in the retail public hire a manager? They, of course, buy him right at the top, and then they go through the next drawdown and they hate the guy. I'm getting tired of him. I'm going to fire him. I'm going to take the money and I'm going to buy Joe Schmo over here, who's just finished a really good
his new
track
high.
record,
Yeah.
and I'm going to get in on that one. And then he goes into his drawdown, and oh gosh, I wish I knew more what I was doing. I keep losing money buying these guys. None of these guys know what they're doing. If he just stayed with the first guy, might be at all-time highs. I mean, I many times was at all-time highs in my equity curve, and I was one of my best clients. I would, on drawdowns, I would add more, and on when I was really got into higher risk structures, I would get a little nervous when people were throwing money at me, and I'd start peeling some money off and diversify it off into real estate or other things.
Well, that's smart
They're
just
doing
from diversifying your business risk, right?
exactly, and it's just common sense. But people don't use common sense because they're being emotional. And when emotion starts overriding what you've got going in the mental side of your trading or investing process, bad things can happen.
And what do you think about all these? We'll just call them kids these days, or YOLOs, or whatever, right? Of buying Dogecoin and Bitcoin and
uh,
GameStop.
I've had,
Like
I
they
must,
seem to have thrown the whole. Either they're immensely good at the mental side and they can just handle this volatility and the fact that there's maybe not any real value in what they're buying, or they've just thrown that concept totally out the window and they're highly emotional.
well, I don't
What do you
know.
think?
They took their stimulus check and they went bought a fraction of a share of whatever Dogecoin for pennies. And if they make money, they still have to get out of it. And getting out of it might drive it down a cent or two just on the volume of anything. But, that's not a mature market. That's just, I don't know, people exchanging cash to each other. It's a game everybody's playing. It's a video game or something. Um, I don't think it's serious. I realize the capitalization of cryptocurrencies is ahead of the valuation of real currencies. But real currency, if I'm a grocery store owner and I want to price my Brussels sprouts that day, I can put a price on them and I know what they are. If I try to do that same Brussels sprouts bunch in Bitcoin, I have no idea what price is in Bitcoin because it'll change from the time you pick it up in the produce section to the time you're
Yeah.
checking out at the cashier. It's just, it needs to stabilize a lot more. There needs to be a lot more players. There needs to be a lot more uh, credence in being able to get your Bitcoins and cryptos back out. Dogecoin is a joke.
Like literally is a joke. But
Yeah, it was started as a joke and it's now grown to this big thing. It's humorous, but it must have had hundreds of people take runs on me. How come you're not trading cryptos? And I just say, like, I made slightly more than 100% on my own money last year in my trading account with COVID crash and the run up after. I caught both sides of it. It was insanely profitable for me, the best year I've had in my life. And I didn't trade a single crypto the whole time. I don't need cryptos
Yeah.
to have, and I'm in retirement. I don't even need to make 100% return. I kind of fell into it because the markets moved so much. I didn't have a choice. I just made a lot of money.
The
There's
do you
other
think
years where I don't make that, but
yeah.
you
Do
know,
you think you would have had it in the trend stat portfolio, like when the futures came out? And
uh, when the futures came out, if I had been back at Trendstat days and I had last year's movements, it might not have been 100, but it might have been probably the best year of Trendstat's life
no,
too.
I
It
mean,
probably,
would you have had, well, yeah, that as well, but would you have had crypto, right? Like Bitcoin futures in the portfolio, right? I keep talking to trend guys, like, why not have, you're risking 1/2 of 1% on a trade anyway, right? Like, why not have exposure to it?
I probably would have had somebody, one of the computer jocks, seriously, I would have them creating some uh,
Model, yeah.
24-hour on all day long through the weekend computer system that would be reading the price of Bitcoin and reacting by buyer or selling. So I probably would have something going because there is a lot of movement. So I would use it as a totally trading vehicle, and I would keep it pretty small in the portfolio, and then instruct clients that I've got it in there.
Right. You
But I
seem
wouldn't.
like I'll risk, even if it goes to zero and I lose 2% or something, like, why
Yeah,
not have that in
yeah,
there? And if it
yeah,
goes to 600,000, at least I have a little exposure.
yeah. Exactly. I would probably be looking to do that, but only if I could integrate it into the totally computerized environment. I wouldn't want traders sitting around there on Saturday trying to figure out whether they should go long or short crypto.
Yeah, exactly.
Yeah.
Um,
And there's been
in
some Saturdays recently that have been very interesting.
Very interesting, right?
Nine
And I
percent
wonder if
moves
that's
and
because the futures, right? At least the CME futures. There's these other off out of the country exchanges that have futures, but
yeah.
not as you and I know them. So circling all the way back to this Covel book. So what's his love affair with you? What happened to you two?
What happened to Covel was he was was it Ernst Weil, I believe the term is, podcaster. And so he's cruising along, interviewing this guy and that guy and whatever. And all of a sudden, somebody suggests or mentions my name. And he thinks to himself, this is about episode 200. I'm coming up on a big round number. And I've been doing this for several years, and I've gotten the mechanics, the mic and the sound and the editing and all the stuff that goes along with doing a podcast that you would know. And I've got that all figured out. I think I'm ready to ramp up and ask some big names. So the very first name he discovered was, hey, Tom Basso's retired. He's got a lot of time. He's got a good name from New Market Wizards. He's very helpful with. He saw some of my answers on Facebook that I was doing because we were mutual friends on Facebook, and interchanged, a few things here and there, comments on his posts, his comments on mine. There was a meeting of the mind a little bit. He says, I think it'd be fun to talk to Tom. I'm going to do that. So he puts together the hour 15 minutes, whatever it is, and we have just a blast talking. It is story times and all sorts of stuff. We covered a wide gamut. He gets done with it, edits it up, puts it up there, announces it to the world as he does everything. Twice a week, I think he puts out podcasts. And it immediately goes to his number one listened to podcast. And it's like getting to be twice what the second place is.
Right.
So he is coming up on number 400. So he thinks, well, I've been bumping up who I'm going after, and now I'm interviewing people in government, and I'm able to get a few sports stars that are retired, and an Olympic star from this one Olympic thing, and he's branching out and getting bigger names and diversifying his podcasts, and he's having some success, and a lot of people are starting to subscribe to his podcast. So he comes up on 400 and he says, why don't I go back to the well and see what Tom's doing? I'll just catch up with him. So we do number 400.
Boom.
And this is several years have gone by, and I've now started up maybe enjoytheride.world, and I've done some things, and I've helped a lot of people, and I've gone thousands and thousands more people on Twitter, and I'm more well known than I've ever been. And number 400 goes ballistic again. So he gets to number 600 and he interviews me and he says, I'm going to do something different. I'm going to put out the Super Basso episode. And he combines together 3 of my interviews with a recording, I believe, of some speech I gave at MAR back in 1995 or something that I don't even remember. And he puts that all together in this, I don't know, 4 or 5 or 6 hour Super Basso episode.
Whoa.
That to this day is the most listened to podcast out of his 1,000.
And essentially he turned that episode into the book. Yeah.
That was the start of the book. Then we have my wife's foreword, which to me is hilarious. That's the best part of the book to me, is the foreword, because it's entitled Living with Mr. Serenity by my wife. And oh, she's got all sorts of stuff in there that, you know, really.
Give us one of the highlights from that.
She says stuff like, it's kind of strange because, I don't know, I'll look at the news and I'll see that the markets were off 600 points on the Dow today or something. And she'll casually over dinner ask me, so how did we do? And I'll say something like, oh, we were up, I don't know, $15,000, $20,000 today. And she'll look at me and say, you're
What?
kidding. I said, no, I'm short NASDAQs and blah, blah, blah. And then there'll be another day where, you know, we'll just be out to dinner someplace or something, and the topic comes up. We might be with another couple, and it's a nothing day or something, or the market's been going sideways, and she'll say, so how have we been doing the last month? And I'll say, oh, we're down about 5% this month. Or she'll go, oh my God, you know, she translates that into dollars and goes, oh my God,
Yeah.
I could buy a few cars for that. And she still looks at the dollars, and I look at percents, and I've been doing this so long. I mean, managing 600 million, you're going to have days where real bad days where you lose $5 million.
Yeah, you don't want to look at the dollars then.
No, it drives you nuts. But I've done that for, you know, decades. So to me, so one of her points is I can't tell by Tom's demeanor whether we're having a good day or bad day. And that's what it should be. You know, that's a good relationship we have. She handles all of our real estate, and I handle all of our futures and in currencies and mutual funds and all that trading.
That's where you're supposed to come back to her and say, with you, darling, every day is a good day.
Yeah, that's smooth. That's if you went to husband school.
Yeah, exactly. You can borrow that one. So let's close it out. Or before we go to our favorites, you got any other nuggets you want to share? Anything else?
No, just that the whole back of the book is all a lot of the research that I've done, plus another interview that I did with Aaron Fifield, I think's his name.
Yeah.
And that was a good interview as well. So it's easy to read, edited from some of the interviews and things that have happened out there to clean up some of the languages and the ahs and the ums and the stuff that happens when you do a interview.
Yeah.
You clean that up into a more readable format, and then all the research papers, there's some interesting gems in there that maybe spark some imagination for people. And so it was a fun project. It took us through COVID, and it's starting to come out after COVID, and things are starting to open up. So the timing's good. And I've had a lot of fun with Michael going back and forth on it and getting it put together.
We'll put links to it in the show notes here.
Well, thanks.
So we'll close out with some quick fire questions if you're ready.
I'm ready.
So favorite golf course outside of Arizona?
Pebble Beach.
Pebble Beach. You've played it?
Several times. Won a tournament there.
Won a tournament there.
With my bride.
All right. I like it. Favorite type of wine that's not your own and that's not the or maybe we'll say
I'd probably go with a red blend like
Super Tuscan.
not a Super Tuscan so much. I like Super Tuscans a lot. I think I'd probably go with a California red blend or cuvee. A number of them are good. None really come to mind
No, yeah,
specifically.
just generally is good.
Yeah,
And your favorite type to make is what you said before. The I
that
can't
would
remember
be the yeah, the Amarone is one of my favorites. I've
Amarone.
probably made that 7 or 8 times in the last few years.
What's its texture? What's its flavor?
It's raisiny a little bit on its finish because of the concentration of the grapes. They dehydrate the grapes down, then squeeze the juice. So it's a little higher in sugar, a little higher in alcohol, but it has a raisiny sort of texture to it. So it's very interesting and different from other wines, and not a whole lot of tannin the way they do it. So it
I need that. I have the bad histamines, and the tannin gets me.
and
I drink
and well, and my wine doesn't have a whole lot of the preservatives that a lot of vintners will put in it. So a lot of people who have allergies can like my wine, and they don't seem to get the headaches.
All right.
Uh,
Well, send it out. Send a case out here to Benny.
I am not getting a new job being a vintner. I am retired happily. I want to stay that way.
Favorite investing book outside of Covel and the ones we've talked about?
I tell you a strange one that
Okay.
has really impacted my life, my investing life, and my thinking lately. Lawrence, my partner in the seminar in Miami coming up, Lawrence Bensdorp is his name. He's a Dutch fellow, lives in Brazil, brilliant guy. Never even finished high school, but knows his investing. He's been very successful in doing what he's doing. He actually wrote a book that I really love called Automated Stock Trading Systems. And it's basically about automating and running multiple systems at the same time and what you look for in doing that. That has been easy to read and highly educational. I've referred a lot of people to that book.
Is it in Portuguese or is it in English?
Uh, he wrote it in English, but it has been translated a little bit in a few other languages. I'm not. I know it's in Korean now, but I haven't kept track of what other languages it's in. I only need the English version myself. But he, during COVID, he just kind of said, "Okay, I can't go anywhere. I think I'll just move to Brazil and learn Portuguese." So he had 5 languages. Now he has Portuguese.
A sixth.
So, and now he's fluent in Portuguese.
And so you mentioned dancing. You also mentioned singing. You got a favorite karaoke song?
Yeah, I'm a Frank Sinatra, Fly Me to the Moon, Summer Wind, Engelbert Humperdinck, After the Loving, uh, Dean Martin, On an Evening in Roma. Some of
You got any
those.
good? You do it at home, or you go to a karaoke bar?
I have complete karaoke setups at both of my houses, and I'll invite people over, and we open the wine up, and we have individual mics for everybody, so we don't spread COVID germs that much, and we stay socially distanced and have a great time.
Perfect.
And that, I take care of the Frank Sinatra, and other people, take care of John Denver, and my wife tends to sing a lot of Carpenters and Anne Murray and a little bit more alto voices.
I'll send you my family did a COVID karaoke, a few efforts. I'll send one to you. I don't know if it's ready for public consumption, but you can see
Well,
it.
it's fun because, especially with everybody being locked up, I found it being very liberating to get out. And I have a huge room that everybody was in, so there's easy to separate. And everybody just brings like an appetizer or a bottle of wine or something, and you just have fun. And we built up a piece of wood with individual mic covers, and you can get them from Amazon, different colors. And you just got to remember, okay, I am the hot pink, or I'm the green, or I'm the black. And then every time you go up there, we just change out the cover on the mic, and you're in good
Everyone's
shape.
safe.
Yeah.
Love it. And lastly, we ask everybody your favorite Star Wars character.
Okay.
Okay.
I would say Han Solo always made me laugh.
Yeah, and he was
Just
pretty
just some of
Calm, under
the
pressure.
joke. Yeah, under pressure. He's going into warp drive and or star drive or whatever they called it, where all the lights flashed
Yep.
by the canopy.
Hyperdrive.
Hyperdrive. And and he's joking around with the big guy, Waki, is he?
Yeah.
Uh,
Chewbacca.
Chewbacca, and he's in all these situations that, just like in trading, stuff's being thrown at him and all that, and he's saying, something like, "This might be a little difficult,"
Yeah.
and making it sound like it's no big deal, but he's about ready to, blow up that part of the universe or something. I just thought that he had some great lines and was cool under fire.
Definitely. I love it. All right, Tom, thanks so much. We'll look you up next time I'm out there in Arizona.
Yeah, please do. It's
Yeah,
fun.
my dad's moved down to Tucson, so I get down there once or twice a year now.
Well, in some cases, you got to come through Phoenix to get to Tucson, because Tucson's got a lesser airport. So you'll
Yep.
find some of the flights go into Phoenix, and then you kind of have one more leg to finish
Yep.
your flight.
Flew out of Phoenix last time, so
Yeah, it's
definitely.
only probably from Tucson to the airport. It might be an hour and 15, something like that, maybe.
All right,
Depends
I'll
on
let you take my
traffic.
money in a golf game.
Yeah, we can. I'll have you up to Pinnacle Peak Country Club if you want. If you can spend an extra day here,
Done and
it's
done.
it's
I want
fun.
some
Yeah,
wine and some golf, and then we'll call it a
we
day.
can handle both of those.
We'll
It's been
bring
a
Eric
pleasure
along.
talking to you.
Yeah.
It's been a real pleasure and a lot of fun to chat with you. I hope it helps some investors out there, and I hope you have a great rest of your day and the podcast goes well for you.
All right. Thanks so much, Tom.
Bye, Jeff.
Bye-bye. The Derivative is brought to you by CME Group. CME Group is the world's leading and most diverse futures and options exchange. For more information and educational resources about futures and options, visit cmegroup.com.
You've been listening to The Derivative. Links from this episode will be in the episode description of this channel. Follow us on Twitter at RCMAlts and visit our website to read our blog or subscribe to our newsletter at rcmalts.com. If you liked our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear from you.